The housing market plays a big role in shaping homeowners insurance, but it's not always obvious how the two are connected. In this video, we're going to explore how changes in the housing market impact homeowners' insurance rates, deductibles, underwriting appetite, and more. Whether the market is booming or cooling down, these shifts can affect what you pay and the coverage you can get. Let's start with what happens when the housing market is expanding. Home values are rising, demand is high, and new construction is booming. In this kind of environment, the replacement cost of homes tends to go up. That's because higher property values often come with higher costs for materials, labor, and construction. When replacement costs go up, insurers may need to raise premiums or adjust coverage limits to make sure your policy reflects the true cost of rebuilding your home if there's a loss. During housing booms, insurance deductibles might also trend higher. Insurers sometimes raise deductibles to manage their exposure to high-value properties or to offset rising claim costs. And when the market is hot, we often see more homeowners upgrading or remodeling their properties, adding new risks and exposures that must be evaluated and underwritten appropriately. Now let's look at what happens when the housing market slows down or enters a recession. In a cooling market, home values may flatten or even decline. That could lead to downward pressure on replacement cost estimates, but not always. Insurers don't just look at market value, they look at what it would cost to rebuild the home, which is often disconnected from sale prices. So even if your home's value drops, insurance premiums might not follow if material and labor costs remain high. In times of market downturn, insurers may also tighten underwriting standards. If the broader economy is uncertain, carriers may become more selective about the risks they're willing to insure, especially in areas with a history of claims, poor maintenance, or disaster exposure. This can reduce capacity in certain regions, driving up rates or making it harder to find coverage. It's also important to recognize that housing market dynamics don't exist in a vacuum. Other factors, like inflation, supply chain disruptions, and catastrophe risk, can have a much bigger impact on homeowners' insurance rates than market conditions alone. For example, in recent years, inflation pushed the cost of building materials to record highs. This significantly raised replacement costs and forced insurers to raise premiums across the board, regardless of what was happening with housing prices. Catastrophe risk is another major factor. Areas vulnerable to wildfires, floods, hurricanes, or other natural disasters often see insurers reassess their exposure, reduce coverage offerings, or even exit the market entirely. This can lead to non-renewals, limited options, and higher rates even if local housing values are declining. In some parts of the country, these broader pressures have outweighed housing market trends. States like Florida, California, and Louisiana have seen severe disruptions in homeowners' insurance availability and affordability, not because of housing prices, but because of rising catastrophe losses, legal costs, and reinsurance challenges. So what does all this mean for policyholders and homebuyers? It means that understanding your insurance coverage is more important than ever. Make sure your policy limits reflect current replacement costs, not just market value. Ask your insurer or agent how inflation or catastrophe risk may impact your premiums or deductibles. And if you're buying a new home, don't forget to factor in the insurance landscape of that area. It can vary dramatically depending on geography, risk profile, and insurer appetite. Looking ahead, the future of homeowners insurance will continue to be influenced by a combination of housing market dynamics and larger forces like climate change, inflation, and regulation. Insurers will need to evolve their models and pricing strategies to stay ahead, and homeowners will need to stay informed. If you found this video helpful, make sure to like, subscribe, and follow for more insurance insights and tips to better understand the P&C insurance industry. Drop your questions or topic suggestions in the comments below. We're here to help you navigate the world of insurance with confidence. Thanks for watching.